All right, welcome to another episode of Mike Reads. Tonight we'll be continuing in our series on Adam Smith's The Wealth of Nations with Book 2, Chapter 2, Read 2, Chapter 2 entitled, Of Money Considered as a Particular Branch of the General Stock of the Society, or of the Expense of Maintaining the National Capital. We're in our second read in this chapter, so without further ado, let's dive right on in. That the greater part of the gold and silver which, being forced abroad by those operations of banking, is employed in purchasing foreign goods for home consumption, is and must be employed in purchasing those of this second kind, seems not only probable but almost unavoidable. Though some particular men may sometimes increase their expense very considerably, though their revenue does not increase at all, we may be assured that no class or order of men ever does so, because, though the principles of common prudence do not always govern the conduct of every individual, they always influence that of the majority of every class or order. But the revenue of idle people, considered as a class or order, cannot, in the smallest degree, be increased by those operations of banking. Their expense in general, therefore, cannot be much increased by them, though that of a few individuals among them may, and in reality sometimes is. The demand of idle people, therefore, for foreign goods being the same, or very nearly the same, as before, a very small part of the money, which being forced abroad by those operations of banking, is employed in purchasing foreign goods for home consumption, is likely to be employed in purchasing those for their use. The greater part of it will naturally be destined for the employment of industry, and not for the maintenance of idleness. When we compute the quantity of industry which the circulating capital of any society can employ, we must always have regard to those parts of it only, which consist in provisions, materials, and finished work. The other, which consists in money, and which serves only to circulate those three, must always be deducted. In order to put industry into motion, three things are requisite: materials to work upon, tools to work with, and the wages or recompense for the sake of which the work is done. Money is neither a material to work upon, nor a tool to work with, and though the wages of the workman are commonly paid to him in money, his real revenue, like that of all other men, consists not in the money, but in the money's worth, not in the metal pieces, but in what can be got for them. The quantity of industry which any capital can employ must, evidently, be equal to the number of workmen whom it can supply with materials, tools, and a maintenance suitable to the nature of the work. Money may be requisite for purchasing the materials and tools of work, as well as the maintenance of the workmen. But the quantity of industry which the whole capital can employ is certainly not equal both to the money which purchases, and to the materials, tools, and maintenance which are purchased with it, but only to one or the other of those two values, and to the latter more properly than the former. When paper is substituted in the room of gold and silver money, the quantity of the materials, tools, and maintenance which the whole circulating capital can supply may be increased by the whole value of gold and silver which used to be employed in purchasing them. The whole value of the great wheel of circulation and distribution is added to the goods which are circulated and distributed by means of it. The operation, in some measure, resembles that of the undertaker of some great work, who, in consequence of some improvement in mechanics, takes down his old machinery and adds the difference between its price and that of the new to his circulating capital, to the fund from which he furnishes materials and wages to his workmen. What is the proportion which the circulating money of any country bears to the whole value of the annual produce circulated by means of it, it is, perhaps, impossible to determine. It has been computed by different authors at a fifth, at a tenth, at a 20th, and at a 30th part of that value. But how small soever the proportion which the circulating money may bear to the whole value of the annual produce, as but a part, and frequently but a small part, of that produce, is ever destined for the maintenance of industry, it must always bear a very considerable proportion to that part. When, therefore, by the substitution of paper, the gold and silver necessary for circulation is reduced to, perhaps, a fifth part of the former quantity, if the value of only the greater part of the other 4/5 can be added to the fund which are destined for the maintenance of industry, it must make a very considerable addition to the quantity of that industry, and, consequently, to the value of the annual produce of land and labor. An operation of this kind has, within these 5 and 20 or 30 years, been performed in Scotland by the erection of new banking companies in almost every considerable town, and even in some country villages. The effects of it have been precisely those above described. The business of the country is almost entirely carried on by means of the paper and of those different banking companies, with which purchases and payments of all kinds are commonly made. Silver very seldom appears except in the change of a 20 shillings banknote, and gold still seldomer. But though the conduct of all those different companies has not been unexceptionable, and has accordingly required an Act of Parliament to regulate it, the country notwithstanding has evidently derived great benefit from their trade. I have heard it asserted that the trade city of Glasgow doubled in about 15 years after the first erection of the banks there, and that the trade of Scotland has more than quadrupled since the first erection of the 2 public banks at Edinburgh, of which the one, called the Bank of Scotland, was established by Act of Parliament in 1695, the other, called the Royal Bank, by Royal Charter in 1727. Whether the trade, either of Scotland in general or of the city of Glasgow in particular, has really increased in so great a proportion during so short a period, I do not pretend to know. If either of them has increased this proportion, it seems to be an effect too great to be accounted for by the sole operation of this cause. That the trade and industry of Scotland, however, have increased very considerably during this period, and that the banks have contributed a good deal to this increase, cannot be doubted. The value of the silver money which circulated in Scotland before the Union in 1707, and which immediately after it was brought into the Bank of Scotland in order to be recoined, amounted to 411 £117, 10 shillings 9 pennies sterling. No account has been got of the gold coin, but it appears from the ancient accounts of the Mint of Scotland that the value of the gold annually coined somewhat exceeded that of the silver. There were a good many people, too, upon this occasion who, from a diffidence of repayment, did not bring their silver into the Bank of Scotland, and there was, besides, some English coin which is not called in. The whole value of the gold and silver, therefore, which circulated in Scotland before the Union, cannot be estimated at less than £1,000,000 sterling. It seems to have constituted almost the whole circulation of that country, for though the circulation of the Bank of Scotland, which had then no rival, was considerable, it seems to have made but a very small part of the whole. In the present times, the whole circulation of Scotland cannot be estimated at less than 2 millions, of which that part which it consists in gold and silver most probably does not amount to 500,000. But though the circulating gold and silver of Scotland have suffered so great a diminution during this period, its real riches and prosperity do not appear to have suffered any. Its agriculture, manufactures, and trade, on the contrary, the annual produce of its land and labor, have evidently been augmented. It is chiefly by discounting bills of exchange, that is, by advancing money upon them before they are due, that the greater part of banks and bankers issue their promissory notes. They deduct always, upon whatever sum they advance, the legal interest till the bill shall become due. The payment of the bill, when it becomes due, replaces to the bank the value of what had been advanced, together with a clear profit of the interest. The banker who advances to the merchant whose bill he discounts, not gold and silver, but his own promissory notes, has the advantage of being able to discount to a greater amount by the whole value of his promissory notes, which he finds by experience are commonly in circulation. He is thereby enabled to make his clear gain of interest on so much a larger sum. The commerce of Scotland, which at present is not very great, was still more inconsiderable when the two first banking companies were established. And those companies would have had but little trade had they confined their business to the discounting of bills of exchange. They invented, therefore, another method of issuing their promissory notes, by granting what they called cash accounts, that is, by giving credit to the extent of a certain sum, £2,000 or £3,000, for example, to any individual who could procure 2 persons of undoubted credit and good landed estate to become surety for him, that whatever money should be advanced to him, within the sum for which the credit had been given, should be repaid upon demand, together with the legal interest. Credits of this kind are, I believe, commonly granted by banks and bankers in all different parts of the world. But the easy terms upon which the Scotch banking companies accept of repayment are, so far as I know, peculiar to them and have, perhaps, been the principal cause both of the great trade of those companies and of the benefit which the country has received from it. Whoever has a credit of this kind with one of those companies and borrows £1,000 upon it, for example, may repay this sum piecemeal by £20 and £30 at a time, the company discounting a proportional part of the interest of the great sum from the day on which each of those small sums is paid in, till the whole be in this manner repaid. All merchants, therefore, and almost all men of business, find it convenient to keep such cash amounts with them, and are thereby interested to promote the trade of those companies by readily receiving their notes in all payments, and by encouraging all those with whom they have any influence to do the same. The banks, when their customers apply to them for money, generally advance it to them in their own promissory notes. These the merchants pay away to the manufacturers for goods, the manufacturers to the farmers for materials and provisions, the farmers to their landlords for rent, the landlords repay them to the merchants for the conveniences and luxuries with which they supply them, and the merchants again return them to the banks in order to balance their cash accounts, or to replace what they may have borrowed of them, and thus almost the whole money business of the country is transacted by means of them. Hence the great trade of those companies. By means of those cash accounts every merchant can, without imprudence, carry on a greater trade than he otherwise could do. If there are 2 merchants, one in London and the other in Edinburgh, who employ equal stocks in the same branch of trade, the Edinburgh merchant can, without imprudence, carry on a greater trade and give employment to a greater number of people than the London merchant. The London merchant must always keep by him a considerable sum of money, either in his own coffers or in those of his banker, who gives him no interest for it, in order to answer the demands continually coming upon him for repayment of the goods which he purchases upon credit. Let the ordinary amount of this sum be supposed £500. The value of the goods in his warehouse must always be less by £500 than it would have been had he not been obliged to keep such a sum unemployed. Let us suppose that he generally disposes of his whole stock upon land, or of goods to the value of his whole stock upon hand, once in the year. By being obliged to keep so great a sum unemployed, he must sell in a year £500 worth less goods than he might otherwise have done. His annual profits must be less by all that he could have made by the sale of £500 worth more goods, and the number of people employed in preparing his goods for the market must be less by all those that £500 more stock could have employed. The merchant in Edinburgh, on the other hand, keeps no money unemployed for answering such occasional demands. When they actually come upon him, he satisfies them from his cash account with the bank, and gradually replaces the sum borrowed with the money or paper which comes in from the occasional sale of his goods. With the same stock, therefore, he can, without imprudence, have at all times in his warehouse a larger quantity of goods than the London merchant, and can thereby both make a greater profit himself, and give constant employment to a greater number of industrious people who prepare those goods for the market. Hence the great benefit which the country has derived from this trade. The facility of discounting bills of exchange, it may be thought indeed, gives the English merchants a conveniency equivalent to the cash accounts of the Scotch merchants. But the Scotch merchants, it must be remembered, can discount their bills of exchange as easily as the English merchants, and have, besides, the additional conveniency of their cash accounts. The whole paper money of every kind which can easily circulate in any country never can exceed the value of the gold and silver, of which it supplies the place, or which, the commerce being supposed the same, would circulate there if there was no paper money. If 20-shilling notes, for example, are the lowest paper money current in Scotland, the whole of that currency which can easily circulate there cannot exceed the sum of gold and silver, which would be necessary for transacting the annual exchanges of 20 shillings value and upwards usually transacted within that country. Should the circulating paper at any time exceed that sum, as the excess could neither be sent abroad nor be employed in the circulation of the country, it must immediately return upon the banks to be exchanged for gold and silver. Many people would immediately perceive that they had more of this paper than was necessary for transacting their business at home, and, as they could not send it abroad, they would immediately demand payment of it from the banks. When this superfluous paper was converted into gold and silver, they could easily find a use for it by sending it abroad, but they could find none while it remained in the shape of paper. There would immediately, therefore, be a run upon the banks to the whole extent of this superfluous paper, and, if they showed any difficulty or backwardness in payment, to a much greater extent, the alarm which this would occasion necessarily increasing the run. Over and above the expenses which are common to every branch of trade, such as the expense of house rent, the wages of servants, clerks, accountants, etc., the expenses peculiar to a bank consist chiefly in two articles. First, in the expense of keeping at all times in its coffers, for answering the occasional demands of the holders of its notes, a large sum of money of which it loses interest, and secondly, in the expense of replenishing those coffers as fast as they are emptied by answering such occasional demands. A banking company which issues more paper than can be employed in the circulation of the country, and of which the excess is continually returning upon them for payment, ought to increase the quantity of gold and silver which they keep at all times in their coffers, not only in proportion to this excessive increase of their circulation, but in a much greater proportion, their notes returning upon them much faster than in proportion to the excess of their quantity. Such a company, therefore, ought to increase the first article of their expense, not only in proportion to this forced increase of their business, but in a much greater proportion. The coffers of such a company, too, though they ought to be filled much fuller, yet must empty themselves much faster than if their business was confined within more reasonable bounds, and must require not only a more violent, but a more constant and uninterrupted exertion of expense in order to replenish them. The coin, too, which is thus continually drawn in such large quantities from their coffers, cannot be employed in the circulation of the country. It comes in place of a paper which is over and above what can be employed in that circulation, and is therefore over and above what can be employed in it too. But as that coin will not be allowed to lie idle, it must, in one shape or another, be sent abroad, in order to find that profitable employment which it cannot find at home. And this continual exportation of gold and silver, by enhancing the difficulty, must necessarily enhance still further the expense of the bank, in finding new gold and silver in order to replenish those coffers, which empty themselves so very rapidly. Such a company therefore must, in proportion to this forced increase of their business, increase the second article of their expense still more than the first. Let us suppose that all the paper of a particular bank, which the circulation of the country can easily absorb and employ, amounts to exactly 40,000 pounds, and that, for answering occasional demands, this bank is obliged to keep at all times in its coffers 10,000 pounds in gold and silver. Should this bank attempt to circulate 44,000 pounds, the 4,000 pounds which are over and above what the circulation can easily absorb and employ will return upon it almost as fast as they are issued. For answering occasional demands, therefore, This bank ought to keep at all times in its coffers not £10,000 only, but £14,000. It will thus gain nothing by the interest of the £4,000 excessive circulation, and it will lose the whole expense of continually collecting £4,000 in gold and silver, which will be continually going out of its coffers as fast as they are brought into them. Had every particular banking company always understood and attended to its own particular interest, the circulation never could have been overstocked with paper money. But every particular banking company has not always understood or attended to its own particular interest, and the circulation has frequently been overstocked with paper money. By issuing too great a quantity of paper, of which the excess was continually returning, in order to be exchanged for gold and silver, the Bank of England was for many years together obliged to coin gold and to the extent of between £800,000 and £1 million a year, or at an average about £850,000. For this great coinage the bank, in consequence of the worn and degraded state into which the gold coin had fallen a few years ago, was frequently obliged to purchase gold bullion at the high price of £4 an ounce, which it soon after issued in coin at £3, 17 shillings, 10.5 pence an ounce, losing in this manner between 2.5% and 3% upon the coinage of so very large a sum. Though the bank therefore paid no seigniorage, though the government was properly at the expense of the coinage, this liberality of government did not prevent altogether the expense of the bank. The Scotch banks, in consequence of an excess of the same kind, were obliged to employ constantly agents at London to collect money for them, at an expense which was seldom below 1.5% to 2%. This money was sent down by the wagon and insured by the carriers at an additional expense of 3/4%, or 15 shillings on the £100. Those agents were not always able to replenish their coffers of their employers so fast as they were emptied. In this case, the resource of the banks was to draw upon the correspondence in London bills of exchange to the extent of the sum which they wanted. When those correspondents afterwards drew upon them for the payment of this sum, together with the interest and the commission, some of those banks, from the distress into which their excessive circulation had thrown them, had sometimes no other means of satisfying this drought but by drawing a second set of bills either upon the same or upon some other correspondence in London, and the same sum, or rather bills for the same sum, would in this manner make sometimes more than 2 or 3 journeys, the debtor bank paying always the sum and paying always the interest and commission upon the whole accumulated sum. Even those Scotch banks, which never distinguished themselves by their extreme imprudence, were sometimes obliged to employ this ruinous resource. The gold coin which was paid out either by the Bank of England or by the Scotch banks in exchange for that part of their paper which was over and above that what could be employed in the circulation of the country, being likewise over and above what could be employed in that circulation, was sometimes sent abroad in the shape of coin, sometimes melted down and sent abroad in the shape of bullion, and sometimes melted down and sold to the Bank of England at the high price of £4 an ounce. It was the newest, the heaviest, and the best pieces only which were carefully picked out of the whole coin, and either sent abroad or melted down. At home, and while they remained in the shape of coin, those heavy pieces were of no more value than the light, but they were of more value abroad, or when melted down into bullion at home. The Bank of England, notwithstanding their great annual coinage, found to their astonishment that there was every year the same scarcity of coin as there had been the year before, and that notwithstanding the great quantity of good and new coin which was every year issued from the bank, the state of the coin, instead of growing better and better, became every year worse and worse. Every year they found themselves under the necessity of coining nearly the same quantity of gold as they had coined the year before, and from the continual rise in the price of gold bullion, and consequence of the continual wearing and clipping of the coin, the expense of this great annual coinage became every year greater and greater. The Bank of England, it is to be observed, by supplying its own coffers with the coin, is indirectly obliged to supply the whole kingdom, into which coin is continually flowing from those coffers in a great variety of ways. Whatever coin, therefore, was wanted to support this excessive circulation both of Scotch and English paper money, whatever vacuities this excessive circulation occasioned in the necessary coin of the kingdom, the Bank of England was obliged to supply them. The Scotch banks, no doubt, paid all of them very dearly for their own imprudence and inattention. But the Bank of England did pay very dearly, not only for its own imprudence, but for the much greater imprudence of almost all the Scotch banks. The overtrading of some bold projectors in both parts of the United Kingdom was the original cause of this excessive circulation of paper money. All right, that seems like a good place to stop, and we'll come back to that later. So that will be our third read in chapter. So the next read in this book will be the third read in chapter 2, entitled "Of Money Considered as a Particular Branch of the General Stock of the Society, or of the Expense of Maintaining the National Capital." So until then, this has been Mike, signing off.